Welcome everyone. We are thrilled that you're joining us to learn a little bit more about the preserve at Rockledge, our development project. This is so exciting for us, honestly. It's a new senior living community that has been years in the making. And I'm Hillary Graves of Bright Sound Investments. I'm joined tonight by my friend and partner on this opportunity, Ryan Byrne.
Thanks, Hillary. I'm Ryan Byrne with Cashflow Capital Club. I'm one of the sponsors on this project. Me, like Hillary, I couldn't be more excited to present this opportunity to our investors, to our network. When our team first walked this property, we didn't just see 46 acres of raw Florida land. What we saw was an opportunity to really build a community that was going to be built with purpose that would truly serve the needs of this area. And for investors, we saw a path to deliver very strong returns, which have now increased to a whopping 75% average annual return. We'll dive deep to explain exactly how that happened. And we're going to be able to deliver a very high likelihood of a 4x multiple on your capital over a 4-year period. You've heard that right. We're talking about a 75% average annual return. We'll explain completely how we got there. We used a very nice structuring in this deal and risk mitigated for this ground up development project. So today we're going to walk you through the story, the strategy, and how everything fits together. We'll detail how this opportunity went from being great to now being one of the biggest potential profit deals we've ever seen in my real estate career and for my investors as well.
Absolutely. But before we jump in, just a quick note, today's discussion is for educational purposes only. Always review the full project documents. Of course, those will be in the investor portal. They're there now. And consult your own advisor before investing. All right, let's jump into the good stuff.
So here's where we're headed. First, we'll talk about the opportunity, the market story, then our development and design team, who have plenty of experience with these types of projects, will show you how construction and operations really come together to make all of this work. And finally, we'll go through the numbers and next steps. And by the end of this presentation, you'll see why this is one of the highest returning, best risk mitigated projects we've ever offered. I think of this as a guided tour from problem to solution to outcome, both for investors and the seniors who will be living in this community.
That's right. We are building during a moment of massive demographic change. You've probably heard this. So many people, I think it's 11,000 people was the latest stat that I heard, are turning 65 every single day in the USA. We have 77 million baby boomers in the United States, and 7 out of 10 of them are going to require long-term care. So independent living, or 55 plus, as we call it, these communities are really the first level of that, the first level of care. And Florida is ground zero for that wave that investors, economists are commonly referring to as the silver tsunami, as you see here. That surge has created a simple equation. It's more seniors and fewer suitable homes. The demand is rising while the supply kind of lags behind. So that gap really is the problem in our story. And the Preserve at Rockledge is designed to be a solution.
Yes, when we talk about where opportunity lives, it usually follows the people and their movement. Right now, they're coming to Florida. Seniors alone account for half of the state's total population growth. That means 6 out of every 10 Floridians will be over the age of 55 over the next decade. And it's not slowing down. In 23 and 24, Florida has stayed the number one destination for retirees moving from other states. And AARP calls this the gold standard for migration. And Florida attracts seniors at roughly 3 times the rate of any other state. And that's the tidal wave that we're talking about.
Let's look at who these people are and what resources they actually bring. So as of 2024, Americans aged 55 and older control approximately 70% of the nation's household wealth. They also own almost 8 out of 10 shares of US stocks and equity funds and about 70% of the nation's housing wealth. And this is by far the most financially secure generation in American history. So you combine all of that affluence with the migration, you get a powerful equation, and it's an enormous, well capitalized population. They are actively seeking quality communities where they can enjoy those later chapters of life, and frankly, a lot of them, these communities do not exist. So we're kind of filling that gap.
So what we have with this demographic, it's not only the largest and fastest growing demographic, it's also the most affluent and most underserved. And that is the real pain point. Across the US, senior housing construction has not kept pace with the population growth. And especially for our senior population, in many metros, waiting lists are for senior living facilities are months long. And when you compare the availability or the available inventory to projected demand, the shortfall is really staggering. And you can see here on this chart, we need 560,000 new senior units by 2030. But at our current rate, only 191 are projected for development. And that's a 369 unit gap that spells massive opportunity for us as developers and investors. And that's the challenge that we're really solving here, not just building another complex, another multifamily complex, but creating a community that specifically serves the senior population.
Yeah. Rockledge actually sits right in Florida's Space Coast corridor. You might have heard of that. It's close to beaches, it's close to healthcare. There are many major employers there. It's actually one of the fastest growing senior markets in the state. And with the 55 plus population growing 23% in the next 5 years, that's a lot. Demand will continue to put pressure on the rents and on the housing. So again, when you combine that lifestyle, the accessibility, the cost of living, Rockledge really checks every box, and it really is the perfect setting for a project like this.
Here's one of my favorite slides because it shows exactly why we're in Rockledge, why this is a perfect place for senior community like the one that we're developing. You are literally surrounded by everything seniors love about Florida living. There's beaches, cruises, shopping. And what's really important too is how it's all connected. You're 30 minutes from Melbourne Airport, 45 minutes from Orlando International, and just about an hour from Universal and Disney. So whether our tenants want to stay local or host a visiting family, everything is right here and within reach.
You got it. Here's a look at some other things Rockledge has going for it. It is landlord friendly. We look for that when we're looking at these investments. It's growing. There is a strong median income. So it has the need and it has the economic stability that we're looking for. The rents have experienced an 8% growth since 2020. People want to live here. There's a lot of data to back that up.
Yeah, and we wanted to really dig in on this data to see what was actually in place there today. So we're not speculating on future migration for this to work. The demand is already there. And this map right here tells that story. We're not just counting on the silver tsunami that's happening in the future. When we develop here, we're actually talking about this in-place demand. We can look at this market, and we wanted more than just a hunch than these headlines that we're reading about or hearing about at these multi-family conferences. We wanted hard data that backed it all up. So we brought in Greystone Communities. They manage 50 senior communities across the country. And we had them conduct a full feasibility study and compare it to their national portfolio. And what they came back out of the 50 markets that they're in nationwide, this area right here along Florida's Space Coast ranked as the single most attractive place to operate in terms of supply and demand.
So that was a major win, I must say. And this land has a history. This is really interesting. It's actually been in one family for over 60 years. And then after the family patriarch passed, the siblings wanted to create something lasting. They didn't want to just sell. They wanted to kind of be a part of this building project where we're building a community that would serve people for generations to come. And so by the family owners contributing the land in equity, they kind of traded the land for a piece of the equity. That actually helped save us $9 million in capital. So this means more profit going to all of us who are investing in the project. And it's certainly one of the key points that helped boost investor returns so much. It's not the only point, but it's one of the key points. This family, they didn't want to just flip the property or just offload the raw land. It has been in their family for so long, and they really wanted a legacy. So it's kind of something we're proud to be a part of and proud to have them part of the project as well.
So here's what the site will become. We're going to look at 320 units woven around trails, water features, and plenty of green space. Think of this as a resort style amenities included throughout this community. Things like clubhouse, pool, pickleball, gardens, miles of walking paths, all designed for connection, community, safety, peace, and comfort. And this isn't theoretical. The city has seen our plans and they're very excited for us to get started on this.
Yeah, and the landscape plan has actually won a Florida Design Award already, which is kind of incredible. And that's because we had our architects kind of blend the architecture with the nature. So awards aside, the recognition actually matters because it actually shows the city planners, the lenders, the residents that this development has quality baked in from day one. And it's not just beautiful, but it is built and structured to make sense with regards to the financials as well.
And so let's zoom in a little on what the design looks like. The preserve at Rockledge will include two-story buildings with elevators and 32 single-level cottages. So 10% of these units will be single-level cottages. Everything was designed for comfort, convenience, and community. And each home has access to the same resort-style amenities. It's a 22,000 square foot clubhouse, cafe, fitness center, business hub, outdoor pavilions, and miles of trails. And residents can age in place without feeling boxed in, like a lot of senior communities are built these days.
Mm-hmm. Here's a taste of the amenities on deck: a two-story clubhouse, resort pool, wellness garden, got a dog park, pickleball courts, plenty of space for grandkids and gatherings, and every feature kind of encourages connection and belonging. So yeah, it's a nice place to be. It's kind of a place that we would want to move to, right?
Yeah, yeah. It moves the opposite direction of what families and seniors are looking for together as they age is community and not isolation. Here we have a nature and pavilion center. This brings outdoors to life. It's an open air space built for gatherings, learning, and connection. And it will actually double as an education hub and present very well. We're putting this right in the front at the leasing office, so new tenants can get a little taste of the community immediately. And it'll highlight the wetland conservation efforts that are going into this development as well with its sustainable design.
Yep, and the grandkids are going to love this, the playground where they can come and play when they visit their family members.
And here's a rendering of the ponds and walkways that are designed not only to support irrigation, but encourage native species and residents a place to go for a nice walk in the mornings and evenings.
Yeah. All right. Something our team is very proud of is the way that we've worked with the land. As I was mentioning earlier, we're kind of blending the design with nature. So we're actually preserving and relocating nearly 500 mature trees with this project, and over 200 sable palms are going to surround the community.
And here we'll just summarize the amenities that an A-class offering like this would include. It's that two-story clubhouse, the resort-style pool, wellness garden, pickleball courts. It's pet-friendly, and our senior care designers are well-versed in what seniors in this area are looking for when it comes to amenities.
This is actually our build partner here. Projects like this really rise or fall on the people that are behind them. So we're going to meet the team here. This is first up, Kaufman Lynn Construction. They are one of the Southeast's most respected general contractors, the ENR Southeast Contractor of the Year, as a matter of fact, nearly $1 billion in bonding capacity. They are masters of the tunnel form concrete system. I don't know if you've heard of that, but it's this just amazing quick placement building system where it gives you kind of a faster, stronger build with more predictable cost. And it works really well in this area as well. Kaufman Lynn kind of brings the speed and the certainty that we're looking for. And their process delivers a floor in roughly 1 to 3 days, which is that's pretty fast. It's like watching vertical progress and fast forward. And the best part is the predictable budgets. Investors hate surprises, and so do we.
So our construction method, or Kaufman Lynn's construction method, uses this tunnel form concrete. It's storm resistant product. It tests for Category 5 hurricane standards, and it's a very straightforward build. And because we've paired that with Kaufman Lynn's experience, we get a stronger schedule, more predictable timelines. It's faster. It's more cost predictable than these stick-built methods. And it's one way where we're able to add healthy layers of risk mitigation. It's this type of build, along with that $1 billion bond capability that Kaufman Lynn brings to the table, that gives us certainty, gives investors certainty and comfort as well.
And then once we build it, who runs it? So that's where Colonial Oaks, also known as Uprise Living, comes in. They've been serving seniors for nearly 5 decades across multiple states. They've got a wellness first approach, which we really like. Colonial Oaks has completed over 60 full cycle senior living exits. And that was something that we were looking for. I mean, we had to have somebody with the most experience, and doesn't get much better than Colonial Oaks. They've actually averaged a 31% IRR for their investors.
And one thing that's not on this slide that I'll add is that Colonial Oaks maintains a 95% occupancy rate across their operations. The Colonial Oaks was referred to Rod Khleif for some of his operations in senior living. He said once he saw what they were doing and how they were doing it, he is not using any other operators for his senior living projects. So that's worth noting as well.
Yeah, absolutely. Several of these projects are actually the Colonial Oaks projects are partnered with our development team too. So the development team and Colonial Oaks kind of formed Uprise Living together, and they kind of work in tandem. So we'll be introducing them in a few slides, but their motto is love and serve our neighbors, and that's who you want managing your asset.
Barnett Design Studio leads the architecture. They're experienced in both multifamily and healthcare environments. And we're supported by a deep bench of engineers and consultants who've already delivered entitlements, ERP permits, grading plans. And in other words, all the what ifs that you would have with a ground up development project have been handled and planned for.
Let's take a look at Trinity Development Partners, our team. This is who is partnered with Colonial Oaks to make Uprise Senior Living. You'll see the kind of team that you want steering the project of this scale. They're experienced, they are Florida focused, and proven across every phase of development. They don't just build, but they are really well versed in every phase. They're based in Boca Raton. They specialize in full cycle development. And between the principals, there's over 70 years of experience. Paul Shapansky, the CEO, has overseen over 100 Walmart Supercenter development projects in Mexico and the United States. So that, that's large scale development expertise at its finest. So if you know what goes into building a Walmart Supercenter, I mean, as you can imagine. And then Abraham Ween, who has decades of design and construction leadership. Together, these two gentlemen have entitled hundreds of acres and thousands of units across the state of Florida, projects that range from senior housing to major rental communities.
And so let's take a look at investor returns, what it looks like for you as an investor. When we first underwrote this deal, we expected to bring in roughly 12 million in preferred equity from a JV partner in addition to LP capital that was needed. And that was the plan until we closed on this property. And then over just last 2 weeks ago, something pretty amazing happened. Post close, the team was able to secure an additional 20 million in low cost PACE financing. PACE is what you get for meeting. It's the lending that you can qualify for by meeting certain environmental standards and efficiencies in your build. And so that one move eliminated all of the preferred equity that we thought we were going to need and much of the LP capital that we would have required as well. So it cleaned up the structure and it sent the investor returns through the roof. So those two things of not having to purchase the land being contributed in exchange for equity, and then having a majority of the cost of this build supported by PACE financing, just really put the numbers through the roof to your benefit. So when we're looking at these numbers, you're thinking how and why. We're talking about two major events that reduce the capital to expand profits and deliver it to a fewer amount of investors. And that's all it is. First, we had the land contribution and then this PACE financing because of the environmental build. And that's what makes this project so rare, so unique, very unlikely to replicate this in the future because of those events. The project itself is fully funded. And now the equity that is available is coming from one of the original sibling landowners who has requested for an early exit to get to retirement. He's a retired Catholic priest. He went along with us to close, and we asked if we could facilitate the sale of his equity if it was priced right. And I think it's more than so, as you can see in these numbers. If you want to follow along, here's a layout. If you were so fortunate enough to come in for all of this equity, it would be 3 million in exchange for 20% in this project. It's a ground up development, so there's no cash flows in the interim. And what we assume right here is a forced sale in a deflated market. And that's how we're getting to these returns.
Yeah. So again, we're assuming that sale in a not great market, right? So if it's in a really favorable market, could be even better, which is insane to say. All right, so independent living 55 plus. Let's start at the top here. Look at the rents and our comparable. When it comes to active senior living in this market, we really are in a category of one. There isn't a single A-class independent living community for seniors like this in Rockledge or Cape Canaveral, and none are currently under development. So we really are the only ones. And when you're the first to deliver a best-in-class product in a high-demand area, the absorption and the retention are going to move in our favor. So we do have A-class comps from other areas in Florida with somewhat similar demographics. And these comps can give us a way to kind of benchmark our rents to our finish level. And they give us data to price smartly while leading the local market.
And I want to, before we move on, I want you to look at these two numbers. The one at the bottom is our 2-bedroom pricing. going into this underwriting. And if you look to the right, this 4,700 number is being pushed as something that we will work towards. And we got feedback on and reassurance on this 4,700 number, not only from Colonial Oaks, but also Greystone communities when they did that feasibility study um, as the upside potential.
Yeah.
Let's look at the alternative seniors do have in this market. Now, if you're looking for anything that resembles a senior community in this area, these are your options. And honestly, they're not what today's seniors are looking for. They are mostly assisted living and nursing style facilities with higher price points, tighter restrictions, and a clinical feel that doesn't match the lifestyle this demographic actually wants. So there's a huge gap in the market here. And they're offering a level of care that's much farther on the spectrum, if you will. But the demographics in this area suggest a need for something that offer community and low maintenance active living, but their need for personal care and health care is much lower. And that's the sweet spot that we're looking to fill. But you can even see the independent living options that are baked in to these assisted living communities are much more expensive, more restrictive. There's no open to this. It's a boxed in feel that's more like nursing care, and you're forced to pay this if you want anything that resembles a senior community at all.
Yeah. So this is where we get to show you just how far along this project already is. I mentioned at the beginning, this has been years in the making. So we're not starting from scratch. We're already well into the execution phase. The site plan has been approved by the city of Rockledge, and we have entitlement in place for 370 units. We've also submitted a request to increase that number based on the updated demand in the market. And we've received our environmental resource permit from the St. John's River Manage, or what is it? St. John's River Water Management District. The grading plan is finalized, and the design itself was recognized, as I mentioned, by the ASLA Florida Design Award for outstanding landscape architecture. And again, that is a big deal for us. All of the front end studies, the environmental, the cultural, the geotechnical, they've all been completed, along with the Gopher Tortoise survey and the land use feasibility report. So every major due diligence milestone is actually behind us. Now, of course, throughout construction, the city will continue reviewing the permits and conducting inspections. So that's kind of a normal, ongoing part of the development. And the key point is that we are fully entitled for this plan. So we are positioned to move efficiently through the next steps. And with Colonial Oaks already leading marketing and pre-leasing, we're expecting to have a strong occupancy momentum even before the construction wraps up. So when we say this project is real and moving, we really mean it. The foundation is solid. The details are kind of dialed in, and every next step is already in motion.
Right now, here is our base case forecast. We've modeled this very conservatively using current rent and expense data verified against local comps, third-party feasibility reports. Our occupancy ramp up, lease up timeline, and expense assumptions is intentionally cautious. There's no aggressive projections baked in to get to the numbers that we were looking at earlier. And this is an important point. This forecast isn't built on wishful thinking. It's built on verified data and decades of operating experience, both from Colonial Oaks and Greystone. And that's the difference between a story that sounds good and a plan that actually works. And there's a few numbers I want to highlight on this. And one is specifically the expense ratio. You can see the expense ratio of 32%. That 32% number came directly from Greystone and their operations. That's their average performance across their independent senior living communities, give or take 2% up or down. When you're offering a multifamily that has premium rents, A class, a lot more goes to the bottom line. A lot of people ask us on specific line items in the operating expenses, such as insurance. What are you doing? Where is insurance now? What if insurance rates go up? We did sensitivities on this and said, okay, insurance are at all-time high here in Florida. What happens if they double? When they double, we're still cash flowing. We're still able to make distributions on a stabilized property. The debt service is baked in at 9% interest. That PACE financing is going to be about approximately 70%. And we've already got an LOI that puts us today at approximately 7.25. So even that number is way above what we're expected to pay on the debt service side. So I wanted to add those few notes on this forecast slide.
Yeah, and we actually made our sale assumptions even more conservative. We're assuming a forced sale in year four, not in a soft market, but in a full downturn, or a 25% drop in real estate values with this exit cap rate of 6%. And in this scenario, the market has tanked, the values are down, and we're still projecting outstanding investor returns. And just to put that in perspective, we're using a 6% exit cap rate. And that's where 1980s C class properties are trading today. So we're modeling this A class new build as if it were a decades old asset in a distressed market. And even with that kind of conservative pressure, the numbers still perform.
So when you take that for sale scenario that we just walked through in a down market using that valuation metric of a 6% exit cap rate, that full stress test, this is what it's producing. Those are ultra conservative assumptions. The model still delivers the kind of returns that we showed you at the beginning. That's that 75% average annual return over the course of 4 years. That's a 41% IRR. And we noted on those two events, but there is upside to this. But if you're not sold on this, I don't know how much more valuable the upside is, but we could take a look at that as well.
Yeah, this slide actually shows what happens when we look beyond the conservative base case, the upside potential on where the market is today. Right now, LEED certified A class communities like ours are trading at valuations higher than anything shown on this page. In other words, the real world numbers are already better than what we modeled. So if the market holds steady or performs anywhere near its current levels, the upside for this project only gets stronger.
So here's the roadmap from pre-construction to horizontal work to vertical, delivered in 2 phases with a plan for lease up that gets finalized before construction is complete. That lease up plan and marketing plan has already been started by Colonial Oaks, and we haven't even broken ground yet. And then eventually we will refinance into long-term agency debt, and sell to realize our profits. To get the full 36-month execution calendar, that's available in the appendix if you want to see the actual line by line, step by step process of what we're doing.
Yeah. So land closed, financing secured, strategic partners signed. We are fully funded. We are getting ready to break ground. So here's where we stand. We closed on the land in September 2025. So last month, the project, again, it's fully funded. So this limited equity that became available really is just the retired family member that Ryan was talking about who requested for an early exit. So that's where this equity offering that we're talking about right now is coming from. It's a limited $3 million. It's available, gives you a 20% stake in a $110 million build. It is first come, first served, available to accredited investors. I sent out to at least those of you that are on my mailing list what accredited investor definition is, and that's something that you'd have to verify for us in the portal. It's easy, but just putting that out there. One of the biggest wins, our environmental efficiency standards really allowed us to increase that C-PACE financing. So that actually went from $30 million to $50 million. And again, this eliminated the $12 million in preferred equity, which lowered the costs and put more profits in investor pockets.
Between Kaufman Lynn's construction bonding capacity and their ability for over $1 billion in bonding capacity, we have Colonial Oak's operational track record, and their results, and the PACE financing. The big risk you normally see in development have been answered, thought about, and presented to you today. And that's the difference between a speculative project and a risk mitigated strategic one.
Mhm.
So we have risk mitigation really built into every layer of this project.
Yeah, the beauty of building a true institutional quality, cash flowing product like this is the flexibility that it gives our investors at exit. So, our plan is to sell into a REIT, and that creates multiple options. Investors can actually choose to take the REIT shares and stay in the deal, continuing to benefit from steady cash flow for years to come. Or if you prefer liquidity, you can sell your shares and cash out completely. You can even do a combination of both of those things, believe it or not. You can stay in for the income and then take some of your profit off the table. And that's the kind of optionality we love to build into our projects when it's possible. And on this one, it is. Investors are not locked into a single outcome. They have choices and control, and ongoing opportunity, if you will.
And so if you're an investor and you're curious to know if you're like many of the sponsors who want to stay in this project long term because it's the most tax efficient thing to do, we didn't spend on much on talking about the stabilized cash flows in year 3 and 4 when we refi out of the construction loan. We ran the analysis and numbers on that. When we refi out of the construction loan, that looks like 100 to 140% tax-free return of capital back to investors. Your equity percentage would not change. If you came in for 3 million, you have 20%. You get the 3 million plus back as a return of capital, tax-free through that refi. And then on stabilized cash flows thereafter, you're getting 20% a year, 15 to 20% a year on your original capital invested, if that makes sense. So if you're wondering what the future looks like after that return of capital, that's what it would look like, unless you liquidate your shares of the REIT and cash out altogether.
Right. And if you choose to stay in, just in case this didn't already cross your mind, of course, you can reinvest that capital that you get back while you continue to stay in the deal and cash flow. So that's kind of the benefit of doing it that way.
Many of you might be familiar with a lot of the names on this list. When you bring a team for a project of this scale, you want more than just resumes. You want people who have led complex projects and know how to deliver them. And that is this team. We've already spoken about Trinity Development, their CEO, Paul Shapansky, and COO, Abraham Wine. But we also have Brian Fay with Trinity Development. Brian has spent 15 years in property development, in management, and completed more than 800 construction projects. He's hands-on, detail-oriented, and one of the most reliable builders you ever met. I know Brian better than anyone in real estate. We speak on a daily basis on this project and others. A great person. I myself have had the privilege of managing over 1,300 multifamily units, 5 ground up development projects, and it's partnerships like this that make that type of work possible. Together, we're bringing both operational strength and development discipline into everything that we do. Dr. Alex Schlow. He runs the Physicians and Real Estate podcast, and he does multifamily residential assisted living and senior housing projects. His expertise ensures we're designing real world resident needs as well, and not just blueprints. He's on the front lines of that. On here, Sudeep is a multifamily investor with strong technology and strategy background. He brings a sharp business mind and growth focused perspective to everything we do. We skipped over Hillary. We'll round it out, but
There.
you guys all know. There we go. Hillary and Franklin Davis and myself, all working on this project together. This is not my first development project with Hillary. We closed on one earlier in this year for 485 units. Same concept for senior active adults, and it'll be the same team was working on that project as well.
And an awesome team, I must say. And this is my third deal with Brian, and I echo everything you said about him and his experience. It's just awesome people to work with.
This capital stack is very straightforward. At the top, we have our senior construction finance coupled with that 50 million in PACE funding, and followed by the sponsor and LP equity that is in that deal. A majority of that equity that you see right there was the land contribution from the siblings. Very little LP equity was needed for this deal. The sponsors are in this deal for 2.6 million as well.
Right. And all investor returns shown here are net of fees. So what you see is the bottom line after everything. It's a simple, straightforward structure. No waterfalls, no promote, and investors keep all the upside on their equity. So it really is just simple, transparent, and easy to understand.
Well, this is how you can participate in this deal. We're going to keep the portal open for approximately 2 weeks or until it's full. There's not a lot of equity available at this moment, a little more than 1 million or so. If this aligns with your portfolio, here are the steps. Don't miss out on this. The remaining amount of equity will go fast, and the portal is open. Is going to be open this evening, or Hillary, did you open it already?
Yeah, I just opened it. Yeah.
Okay, so you can go into the investor portal. It's in cash flow portal, review the docs, make sure you understand them, and signing the docs is what actually secures your spot. And then you'll wire the money soon after. I mean, again, this is a 506C offering for accredited investors only, and it's going to be made on a first come, first serve basis. Remember, there are no dumb questions. If we didn't hit on something or something wasn't clear, please reach out to Hillary. You can reach out to me, and we'll get those questions answered.
Absolutely. The questions that came to me from some of you already, I'm going to put the question and our response and send that out in an email. And then if you have any further questions, obviously reach out. Please reach out. We're happy to jump on a call with you, and we're very transparent with that kind of thing. Thank you so much for watching. We will be sending out the recording, and we'll be in touch. Thanks, everyone.
All right, thanks, Hillary.
Thank you, guys.